With that April jobs report and news that U.S. factory orders rose more than 1% in March, you'd think the markets would really take off today, but jitters about escalating violence between Russia and Ukraine had investors on edge, and that kept stocks on the downside, boosting gold prices, by the way, by nearly $20 an ounce, highest price there in a month. Now, wrapping up a volatile week on Wall Street, one that saw the Dow close at a fresh all-time high on Wednesday, the blue-chip Dow stocks ended the day 46 points lower. NASDAQ lost 3 today. S&P was down by 2. For the week, each of those three measures was up by about 1%. Ann Miletti joins us now to talk more about today's jobs report and the market. She's a senior portfolio manager with Wells Fargo Advantage Funds. Ann, welcome. Good to have you with us. Why didn't the markets, both stock and bond, really react to this jobs number in a more sort of enthusiastic way?
You know, I think the first initial reaction was very bullish, and then there was some, things that the market looked further at. Probably the fact that the participation rate did go down, and also the the earnings stayed flat. So the fact that you had a lot of job creation, but it didn't increase earnings, that was another probably little nit to the number. Overall, though, this was a pretty positive number. I think it does show that there's been an inflection in the job market. You know,
a lot of people, I don't know whether you're among them, think that the market can move higher from here. But I note that I was looking today at where we are year to date for the three major barometers, NASDAQ, the Dow, and the S&P. And there's a little bit of a gain in a couple of, but basically the Dow's flat. Do you expect the market will go higher as we go into this, usually a sort of a seasonally bumpy period?
It is a seasonally bumpy period. You know, it's been bumpy all year, though, Tyler. You know, you're right, it's flat, but we've kind of, made a lot of movements in both directions to be flattish. I think what the market may be struggling with is a good economy, an economy that may be reaccelerating. We've seen it, the jobs data today, that's one indicator. But an accelerating economy may not necessarily mean that it's great for the market.
All right, Ann, let's try and make some people some money, shall we? Your first stock pick this evening is Johnson Controls. You got a $58 price target on it. Why do you like it?
Yeah, I really like this company because it is exposed to commercial construction. It's an area that we think has been really spend in that area. Non-residential construction has been hurt by the recession. It really never came back. We're starting to see signs that it is coming back. Johnson Controls has a new management team. They're repositioning their business. Their primary business in the past used to be the automobile space, and now they're also in building efficiency, which means controlling lighting, heat, other things within a building. That business is doing well, and we think they can gain share throughout the next 12 months.
I think of them as tied to the automobile business, but you make a good point there that they're branching out.
Yeah.
Let's go on to your next one, which is Steel Dynamics, $23 price target here.
Again, an underperformer year to date, but again, also tied to commercial construction. Steel is a big, obviously, a material component that goes into commercial construction. This is a good management team that's executed in the past. They've gotten their cost structure in line, so now it's about top-line growth. We think we'll start to see that before year-end.
And Thoracic is your final one tonight, a $44 price target on that company.
Yep, Thoratec is a really interesting company in that it makes heart pumps. So people that are going through heart failure that may, in the end, need a heart transplant. It used to be a heart pump that was used to bridge a patient between the time period where they were waiting for a heart. But now it's also being used in destination therapy, which means even if you don't want a heart transplant or may not be able to get one, it's a device that you can live many more years with, and the devices keep getting better, and the quality of life with them continues to improve.
And I misspoke. I called it thoracic. I called it thoracic. I must have been thinking of that great movie, Thoracic Park, right, Ann?
You know what, Tyler? You're not that far off because it's a thoracic surgeon that would actually implant this device, so you're good.
Any disclosures to tell us about and share? How about do you have with these stocks?
We own these stocks in our mutual funds. I don't own them personally.
All right, Ann Miletti of Wells Fargo Advantage Funds, thanks very much.